Problem 2. R and Sons purchased a printing machine from Savita Printers on hire purchase basis on 1st January 1993. The terms of the contract were as follows. The cash price of the printing press was rupees 75,000. That's a printing machine. So the cash price is given as 75,000. Rupees 15,000 was paid on signing the contract on 1st January 1993. So in this problem we have the dates as well, and if they say rupees 15,000 was paid on signing the contract, that is the day the contract is signed, 15,000 is paid. Okay, so obviously that becomes the deposit, or we also call it the down payment. The next statement is very important. The balance was paid in installments of rupees 20,000 plus interest at 15% per annum. Now, please pay attention with this statement. The statement makes a lot of difference. They say the balance was paid in installments of rupees 20,000 plus interest. Now, because they're saying 20,000 plus interest, we can't consider the installment to be only 20,000. Okay, the installment will be basically 20,000 plus the interest that needs to be added. So when we're talking about this column, we can't just write 20,000 here. It's going to be 20,000 plus the interest. So what will be 20,000? If it's going to be 20,000 plus the interest will come from this column, and your cash price paid here will be 20,000. Okay, so there's a slight difference in this problem as compared to the last problem because of this statement. If they had just said the balance was paid in installments of rupees 20,000 each, then that entire 20,000 would come here. But what they have said, the installments are 20,000 plus interest. That means the interest is not included in the installments in this problem. The installments were paid on 30th June every year, so we need to be careful of this date. The installments were paid on 30th June every year, commencing from 30th June 1993. When was the machine purchased? The machine was purchased on 1st January 1993. The installments were paid on 30th June every year, commencing from 30th June 1993. Okay, so that means on 1st January the down payment was made, and immediately 6 months later the first installment was paid. Okay, so they didn't wait for a year to pay the first installment. Immediately 6 months later, they paid the first installment. R and Sons charge depreciation at 20% per annum on the straight line method. I hope you all know what is the straight line method. We also call it original cost method. Okay, where every year the amount of depreciation remains fixed. Amount, we also call it the fixed installment method. Every year the amount of depreciation remains fixed. So every year on 30th June we have to calculate the depreciation. They close their books on 30th June every year. Show the necessary, or show in the books of R and Sons. Who's R and Sons now? R and Sons purchased a printing press. So R and Sons becomes the hire purchaser. So we have to show in the books of the hire purchaser necessary accounts. That means they have not asked for journal entries, it's only ledger accounts. So we are going to do the analysis of payment and directly move to the ledger account. And disclose the relevant items in the balance sheet as on 30th June 1995. So only in 30th June 1995, we need to just show an abstract of the balance sheet. So that we will do towards the end of the problem. Okay. So let's start with year 1 as usual. I've already numbered these columns just to make things a little easy. So year 1, opening balance of cash price. What is the cash price of the printing machine? It is 75,000. Then cash price paid. Now always remember the first row is always for the down payment. Okay, the down payment is 15,000 was paid on signing the agreement. Now we all know that there is no interest on the down payment. There is no interest on the down payment, and this will be your installment is actually your cash price plus your interest, so it's going to be 50,000. Okay, but there is never interest on the down payment because it's paid right in the beginning. What will be the closing balance of the cash price? It's going to be 60,000. Okay, now in this problem I have a column for depreciation as well. So we are going to also calculate depreciation. Can we calculate depreciation right now? It doesn't make any sense because we are just signing the agreement. We are on 1st January 1993. We are signing the agreement. So it doesn't make sense calculating the depreciation. Another thing I want to do is change this. Okay. Here I'm going to make it as date. Sorry. Why? Because I know the dates for sure. So it is 1st January 1993. 1st January 1993. There is no depreciation because we are still at the beginning, we are just signing the agreement. Now we go on to the next entry. Now the next entry happens for the payment of the installment. Now the installments were paid on 30th June every year commencing from 30th June 1993, and the firm also closes its books on 30th June every year. So this is also very important. They close their books on 30th June every year. Okay. So the next will be, normally if nothing of if it was a normal year, it would have been 31st December. Okay, a year later, but here we have kind of bought the machine in the middle of the year because this firm is following the financial year 1st July to 30th. Okay, so our next date will be 30th June 93. 30th June 93. Opening balance of cash price will be the closing balance, the previous closing balance. Now, what are we going to write here? Right now, I said the balance was paid in installments of 20,000 plus interest at 15% per annum. Okay. Now, even though they said installments of 20,000, we can't write 20,000 here directly because 20,000 is not the final installment. It is 20 installment is 20,000 plus the interest. So basically, 20,000 here is the cash price. Okay, I hope you've understood this. Why I'm writing 20,000 as cash price, because installment is 20,000 plus something more. That's the interest. Okay, how do we calculate interest? Always, I put the formula here. Always on the opening balance of the cash price into the percentage of interest. So if you do that, you will get say 60,000 into 60,000 into how much is the interest? If you do that, you can just check on your calculator. 60,000 into 15% into, okay, I will just write it out. 60,000 into 15% into, we are going to write something else here. We are going to write something else here. Can anyone just think what it would be? Can we just say 60,000 into 15% and that would be the figure? Okay. Now, why? What else will be there is, since it's 30th June, it's not for the full year. We have to multiply it by the period accordingly. That means you are paying this interest only for 6 months because we have used the machine or the printing press only for 6 months till now. So if we don't put it as 6 months, we will be basically showing the interest for a full year, which would be wrong. Okay. So here we are going to do into 6 by 12. Into 6 by 12. And if you do that, I think you get 4,500. You get 4,500. Okay, so I've just shown the calculation here. 60,000 into 15% into 6 by 12. So just be careful. Why I have done the 6 by 12 is only because it is 30th. So next we move on to the calculation of the installment. How much will the installment will be? Installment is always your cash price paid plus your interest. So it's going to be your 24,500. Okay. Then we move on to the closing balance of cash price. Now please be careful here. Closing balance is always opening balance minus cash price paid, not minus the installment. Okay, please remember that. Sometimes there could be a confusion. So it's opening balance minus the cash price paid. So opening balance is 60, cash price paid is 20. So here we will have 40. Okay. Now we also have to calculate depreciation. Why we have to calculate depreciation? Because we are at the end of the year. Okay. So they said R and Sons charge depreciation at 20% per annum on the straight line method. They close their books on 30th June every year. So we are on 30th June actually. So we have to also calculate the depreciation. Now how will the depreciation be calculated? Again, what's the price of the asset? It is 75,000 R. Now remember, when we are calculating depreciation, we don't calculate on opening balance of cash price or anything that's of that sort. We calculate on the actual value of the machine. And the actual value of the machine is 75,000. We are calculating depreciation, not installments or interest or anything of that sort. So we don't take 60,000. We are going to take the original cost of the machine. So that's going to be 75,000 into, what's the rate of depreciation? 20% into, again, we are calculating depreciation right now only for 6 months because we had the machine only from 1st January and we are right now on 30th June. If we don't show 6 months, we are going to be showing the depreciation for the whole year, which is going to be wrong. Okay, so the depreciation will only be for 6 months. So 6 divided by 12. And if you do that calculation, I think you will get an amount of 75,000 into 20% into 6 by 12 gives you 7,500. So that's going to give you a figure of 7,500. Okay, so at this juncture, since we are on 30th June, we need to be a little careful because all the calculations happen for a period of 6 months. All the calculations happen for a period of 6 months. So you need to be a little careful. Fine. Now move on to the next one. Now when will be the next one? The installments were paid on 30th June every year commencing from 30th June 1993. That means we have already paid the first installment 30th June 1993 and the next one also will be on 30th June but of the next year, and that would be 30th June 94. 30th June 94. What is the opening balance? Please be careful which figure you bring down. It's going to be 40,000. Okay, cash price paid we know again will be 20,000. Why is it going to be 20,000? Because they said the balance was paid in installments of 20,000 plus interest at 15%. So 20,000 is basically the cash price. Now we will have to calculate the interest. How will we calculate the interest? It's going to be 40,000 into 15%. Okay, 40,000 the opening balance of cash price into 15%. Do we have to again multiply by 6 by 12 or it can be 12 upon 12? It has to be 12 upon 12 because the last one was paid on 30th June 93. Now we are come to 1 year later. So it's already 12 months. It's not 6 months. Okay, so you don't have to do because 12 on 12 is 1. If you want, you can just write it. Okay, if I even write the into 12 upon 12, it will be 1. And anything into 1 is that same thing. So you don't have to write it. If you want, you can write it. So 40,000 into 15% gives me 40,000 into 15% gives me 6,000. Okay, so that is my interest for my interest of the second installment. My interest of the second installment. So how will we get the installment? The cash price paid 20,000 plus interest 6,000 will give me 26,000. And the closing balance of cash price will be opening balance minus what I have paid. That is going to be 20,000. Okay. Now going to the depreciation. Again, when we say depreciation on straight line method, it's always calculated on the original cost. Every year it's calculated on the original cost. So this year the depreciation is going to be again 75,000 into 20%. Again, do I have to put 6 by 12? There's no need. It's going to be 12 into 12. And I don't need to write 12 into 12 because 12 into 12, 12 by 12 is 1. 12 divided by 12 is 1. So 75% into 20, 75,000 into 20% is going to give me, you can check it on your calculators, it's going to give me 15,000. Okay. So why am I not putting 6 by 12? Because it's for the full year. So I don't need to do it. It's for the full year. I don't need to show it separate. Then coming to the next installment, that is 30th June 95. Okay. What is the opening balance? It is 20,000. Opening balance is 20,000. Now, the cash price paid is also going to be, they've said every year installments of 20,000 plus interest. Okay, so we already know this is 20,000. Now, in the last problem, what happened? We knew this. Okay, and this interest was the balancing figure. This interest was the balancing figure. And why did we consider it as a balancing figure? Because we wanted these two columns to tally so that we have a zero here. Okay, now we don't need this because these two columns are automatically tallying. This automatically will become a zero. So interest again can be calculated. Interest won't be the balancing figure. Is that clear? Why is this? Why is there a difference? Because the information that is given is different in the problem. In the last problem, we knew the installment. In this problem, we know the cash price. Okay, so what will be the figure here? It's going to be 20,000 into 15% for the full year. 20,000 into 15%. And 20,000 into 15% will give me 3,000. 20,000 into 15% will give me 3,000 rupees. Okay, so the total is 23,000. Do we have any closing balance to pay? There's nothing. So this means also this is the last year. Okay, this is the last year of the hire purchase agreement because everything is clear. There's nothing else left to pay. And the depreciation here will be, since we have used the asset, it's going to be again 75,000 into 20%, which is going to be 50,000. The same thing because it's for the full year again. Okay, so just to get these totals, the total here is 75,000. The total here is 9,000, so 13,500, and the total here is 88,500. Okay. So basically our cash price was 75,000 like they originally told us. The total interest that we have paid is 13,500 and the higher purchase price, this is the higher purchase price. Higher purchase price is your cash price plus your interest is 88,500. So basically if you had bought the printing press upfront by paying upfront, not paying it in installments, you would have paid only 75,000. But since you bought it on a higher purchase basis, we've ended up paying 88,500 because that is the interest component that we have paid. So what was different in this problem is the calculation of the installment. Here we had to calculate the installment. Why? Because we didn't know the installment. They told us 20,000 installment but plus interest. So the installment was basically 20,000 plus the interest. Okay, so that is what made a difference in the last year where the interest was not the balancing figure. So please be careful how the information is being given. Now we directly move to the entries. Okay, like I said, we don't have to pass the journal entries. We just have to do the ledger accounts. That is what is asked of us. Now, in the books of whose books R and Son, they show in the books of R and Son. So in the books of R and Sons, who's the hire purchaser, R and Sons, the first thing we have is the printing machine account. What did they say? Printing, the set is a printing machine. Printing machine account. Then we have the hire vendor here is Savita Printers. Savita Printers account, and as usual we have the interest account. Since they've asked for the balance sheet, I've made a small abstract, but we are going to show it only in the last year because that's the date they have asked us to show on 30th June 1990. So let's start recording the transaction. The first, since we are in the books of the hire purchaser, the first is record the purchase. So what is the first transaction? The books of the hire purchaser is getting the printing machine. So it will be printing machine account debit to, it's almost like a credit transaction to Savita Printers. So on 1st January 93, printing machine account debit to Savita Printers. Okay. again with the cash price of the machine. The cash price of the machine. Then in Savita printers, we will have it as on the same date, 1st January 93. We're going to have it as buy printing 75,000. That's a first entry. Okay. Once that is done, you make the immediately at the time of signing the agreement, you make the down payment. Now, what's the entry for the down payment? It's hire vendor's account to cash. So who's the hire vendor here? It's Savita Printers account debit to cash or to bank. Like I said, we prefer to use bank. So again on the same date, the date of signing the agreement, to bank, to bank. In bracket, just for you to know, you can put it as down payment. How much was the down payment here? 15,000. You can see it here itself. The down payment here was 15,000. Yeah. Down payment was 15,000. Okay. Then we move on to the installment. We move on to the installment. Now the installment happens. Oh, again, when are we closing books? Please remember always the date of closing here is very important and in these problems. So the date of closing is 30th June 93. So the installment also happens in the same year. So on 30th June 93, we need to show the entries for the interest due. We need to show the entries for the payment of the installment. We need to show the entries for depreciation and the transfer to the profit and loss account. Okay. So for the interest due, what is the entry? We are in the books of the hire purchaser. It will be interest account debit to Savita Printers account. So in Savita Printers, you will have by interest. And how much is that interest? 4,500. Here. The interest is 4,500. And in interest account, you will have it as to Savita Printers. To Savita Printers. And how much is the interest again? 4,500. Okay. The moment the next entry after the interest is the payment of the installment. What's the entry? Hire vendor's account debit to bank or debit to cash. So who's the hire vendor here? Savita Printers account debit to bank. On 30th June 93, we will have to bank, and here right now we are paying the installment. Just for you to understand. Okay, and how much is the installment? The installment, please be careful. We are looking at the installment, not the cash price, because when we are paying, we are just not paying the cash price. We are paying cash price plus interest. So it's going to be 24,500. Okay. Then in the last problem, we directly transfer. The last entry was directly the transfer of the interest to the P&L account, but right now we have depreciation here, so we can't directly transfer the interest to the P&L account. We need to first provide for depreciation and then do the last thing. Okay. So what was the entry for depreciation? Depreciation account debit to asset account. So in the asset account, in the printing machine account, you will have it as by depreciation. 30th June 93, will have it as by depreciation. We've already calculated the depreciation. It is 7,000. Yeah, about 7,500. And the last entry is transfer of the interest and the depreciation to P&L account. Now we don't have a separate depreciation account. Okay, so we are not going to have that. We are only going to transfer the interest to P&L account. If we had opened the separate depreciation account, it would also again be the same entry, but we don't have a separate depreciation account. So directly we are going to transfer this interest. What is the entry? The P&L account debit to interest account. So in interest account, we are going to have it as by P&L Whatever interest is there, we transfer it directly to the P&L account. Similarly, close this account. We're going to have here 79,500. Here also we're going to have 79,500. So our balance carried down on 30th June 93 is going to be 79,500 minus 15,000 and 24,500 gives me 40,000. Okay. Please be careful, bring down the balance immediately. So if we are closing it on 30th June 1993, opening balance will be on 1st July 93, sir, not 94. 1st July 93. The year will start on 1st July 93. So two balance carried down becomes by balance brought down. That is 40,000. Let's see if we are correct. Opening balance, yeah, 30th June 1994. The opening balance at the beginning of the year, that year was 30th June 94 is the end of the year. Beginning of the opening balance of cash price at that year, which is 1st July 1993, is 40,000. So we are correct. Okay, so start with the sequence again. Now we don't have to show the purchase and the down payment. We directly start with the interest. So what is the entry? Interest account debit to higher vendors account. So interest account debit to Savita printers account. So again on 30th June, end of this year now, 94, we're going to have it as by interest. Okay, and how much is the interest in the second year? It's 6,000 rupees. It is 6,000. And in interest account, you will have it as to Savita printers. But on 94, 30th June 94, 6,000 rupees to Savita printers. So after the showing the interest due, the next thing is payment of the installment. Higher vendors account debit to bank. So here it will be Savita printers on 30th June 94. It's going to be to bank for the payment of the installment. And the installment, please check how much is the installment. The installment is, second one is 26,000. Okay. Then we pass the entry for the depreciation. Depreciation account debit to printing machine. Sorry, I just made a small mistake. I forgot to close this account. Okay, we need to close this account as well. I'm sorry. So just let's close this account. Really sorry for that. So here you'll have it as by balance carried down. Here you have it as 67,500. Okay. Bring it down immediately. I'm sorry I missed that. Sorry, 1st July 93. To balance brought down. How much is the balance brought down? 67,500. Now what we were doing, we were the entry of charging the depreciation. So again, we need to charge the depreciation at the end of the year, 30th June 94. By depreciation. How much is the depreciation for the second, at the end of the second year? It is 15,000. Okay. The last thing is transfer the depreciation and the interest to profit and loss account. Since we don't have a separate depreciation account, this entry will feature only in the interest account. So whatever interest we had at that year, at the end of the second year, we transfer to the profit and loss account. Just same amount of 6,000. Then go back and close the books. This has already been closed. I've already closed this by underlining it. Close this account. So you're going to have here, the total here will be 46,000. Here also it's going to be 46,000. 30th June 94. You're going to have 2 balance carry down. 46,000 minus 26,000, we're going to have 20,000. Bring down the balance immediately so that you don't forget. 1st July 94 by balance brought down. That is 20,000. Let's see if we are correct. Yes. Okay. The amount that is outstanding at the beginning of the third year is 20,000, and that's what we paid. So we've done this, and please don't forget the asset account. Let's close the asset account as well. So here we have 67,500, the total 67,500. Okay. So 30th June 94 by balance carry down. So 67, what is the balancing figure? We're going to have an amount of 52,500. Okay, bring down the balance immediately before you start the last year. 1st July 94, to balance brought down 52,000. Is that clear? Now we move on to the entries of the last year. Again, we start with the interest. So here we are going to have, what's the entry for interest? Interest account debit to higher vendors account. So higher vendors here Savita. So in Savita's account we are going to have on 30th June 95. We are going to have it as by interest. And how much is that interest in the last year? The interest in the last year is 3,000. Interest in the last year is 3,000 rupees. Go to the interest and post the same thing in interest. So in interest, it's interest account debit to Savita printers. So we're going to have the same thing. Just change the date. Interest is 3,000 rupees. Okay. Once the interest is shown, the next thing is pay the installment. So how do you pay the installment? Hire vendor's account to cash or to bank. So it's Savita printers account to bank. So 30th June 95 to bank. And how much is the installment? 23,000. Okay. Then we show the depreciation. So we come here, depreciation account debit to printing machine accounts. In printing machine it will be by depreciation. 30th June 95 will have by depreciation. How much is the depreciation? 15,000. Okay. And then the last one is transfer the interest to the P&L account. We do transfer of interest and depreciation, but since I said we don't have a separate depreciation account open, we don't show that entry. P&L account debit to depreciation. So we just show the interest one, 30th June 95. The amount is 3,000. So this account has already been closed. The last year, so we don't need any more rows here. Then move to this account, close this account. Like I said, the last problem in the last year, it will tally. So you have total here 23,000. This side also you have a total of 23,000. Okay. We don't need all these extra rows. And finally, your machine account. Close it on that day, 30th June 95. Now, machine account will not tally because the machine still exists with you. Okay, it's just been 3 years. So after 3 years, it's suddenly not going to disappear. It will still be there. So there will still be a balance carried out. But the hire purchase part is over. Now the machine actually belongs to you. Okay, so now you can actually show it in the balance sheet. So by balance carried down, it is, let's get the total here, 52,500, 52,500. So your balance carried down will be, the balance carried down will be 37,500. Okay, now what is left to be done here is that abstract. Now, why have they asked you the abstract only on 30th June 1995? Because only on 30th September, sorry, 30th June, they've asked for the abstract and disclose the relevant items in the balance sheet as on 30th June 1995. Now, why only on 30th June 1995? Because prior to this, the printing machine is not yours. Okay, as on 30th June 1995, when you pay the last installment, the printing machine becomes yours. So before that, we cannot show it in the balance sheet. We can charge a depreciation, but remember, in a hire purchase agreement, we don't become the owner. The hire purchaser does not become the rightful owner till the last installment is paid. Okay, so now 30th June 1995, if you are showing the machinery account, how we show it, machinery account, we need to show a value, we need to show less depreciation for that year. Okay, now we get all these figures from the uh, machine account itself. Now, what was the value of the machine at the beginning of that year? It's 52,500. So we're going to show here as 52,500. 52,500. And how much was the depreciation for that year? Depreciation was 15,000. 15,000. So basically, the value of the machine at the end of 30th June 1995, we will get the same figure actually, 37,500. If you minus this 15,000 from 52, you are going to get 37,500. So this is how the machine, this is how the abstract of the balance sheet will look. We just have one item. We can't show anything else because we don't have anything. Okay? So 37,500. That's going to be the balance sheet. Please don't total it and all because there's nothing that you can total here. It's just a part of the balance. Is that clear? So if there are any questions with regard to this problem, you've not understood something, please get back to me. Also, another thing I would like to make known to you. If you see every year, the amount of depreciation has remained the same. Here, why it's not the same? Because this is calculated for 6 months. But if it was calculated for the full year, it would have been 7,500 plus 7,500, which would be 15,000. This is what a straight line method is, or original cost method is, where the depreciation amount remains fixed. Why it remains fixed? Because it's always calculated on the original value. It's always calculated on 75,000. Okay, we are going to do another method called the diminishing balance method or the written down value method, where every year you calculate the depreciation on the adjusted value, not on the original value. What is this adjusted value? Take the original value of the machine minus the depreciation. Then the next year, see what is the value at the beginning of that year minus the depreciation. Calculate it on that value and then minus the depreciation. So we're going to do written down value also in another problem. So if there are any queries with regard to this problem, please get back to me. Thank you.